So we have that statement from the EIA. We have crude below its 50-day moving average. What kind of downside can we look at?
There's a big level here at 51.59, 51.75. If we start closing below there, yeah, $50 is psychological level. But really, there's a big target down at 45 if this thing remains bearish that we could really see. But this is more about the dollar than anybody is really talking about. The dollar is leading this market in many ways. Look back to last year at this time, the dollar began a descent of 6.5% to its low in May, and crude oil bottomed at that time and was able to rally. So listen, a lot of people are stuck in the forest, cannot see the trees. You have to realize that, yeah, the dollar may be 3% off its recent high, but it's 10% off of its low last year. And this is holding crude back. So everybody looking for $60 in crude oil, listen, you kind of already saw it, because if you look back where the dollar was in August and September of last year, that's where that would put the crude oil roughly at $60 if you kind of look at that perspective.
Yeah, but Bill, we have seen the correlation between the inverse correlation between the dollar and oil break down. At the reality is stockpiles continue to build here in the U.S. as we go through refinery maintenance, as imports wind up picking up. So can't you explain the downside in oil due to just pure supply and demand, not necessarily that correlation?
No, and I agree. There is going to be directional moves that come from supply and demand, that come from U.S. shale or OPEC production cuts, or just talk from OPEC. And that's going to continue to move the market. Now that we're in this consolidation area, that's why we have not seen $60. So what I'm saying is you have to think about it the way that we have seen $60 achieved already. Now, the dollar is in a range here at 100, and it could top out. And I do think overall a hiking cycle, and depending what we see this year, seasonal economic weakness could bring a lower dollar. But seasonal economic weakness will also bring weakness here in the U.S. and crude oil. So you have to look back from a bigger charting perspective that where the dollar is going to keep crude oil in check. So what we're looking at right now, if crude oil gets down below 51.50, we're going to see another technical directional move. And that's going to be because of shale coming back online, U.S. production really really taking away from what OPEC has done, and then bring the market down to $45 or so. But really the reality is if the dollar does stay up here, that's going to be a quicker move.
Wow, okay, $45, that's a prescient call there.